Hey, it's Darius. Here's an opportunity to join my I-75 CMA Facebook group. It's brand new, so you could be one of the early influencers. I'll leave a link in the description. All right, let's look at comprehensive income, the idea of net income plus other comprehensive income equaling what's called total comprehensive income. So on the exam, you're going to have to know that total comprehensive income equals net income plus other comprehensive income. Total comprehensive income includes all revenues, gains, expenses, and losses. So net income's the starting point, net income's the base. And then you have to include those gains and losses that are not from normal business activities. Total comprehensive income starts with net income and then includes OCI, other comprehensive income, which captures the potential increases or decreases in equity that are expected to materialize only when certain events occur. And there's a financial statement of comprehensive income, and it displays all changes in equity of a company during a particular period, except those that are investments by owners and distributions to owners. All right, how is total comprehensive income calculated? A, is it net income plus dividends? Well, it does start with net income, but we don't add dividends. B, net income minus dividends. No, we ignore dividends when we calculate total comprehensive income. Why? Because total comprehensive income involves changes in our equity, but other than from transactions with owners. So dividends is how we make distributions to owners. We would ignore any transactions with owners when we calculate total comprehensive income. So A and B are out. C says net income plus other comprehensive income. Yes, that sounds good. D says net income plus investments by owners during the period. No, because total comprehensive income ignores transactions with owners. So the answer is C. Total comprehensive income is calculated by taking net income and adding other comprehensive income. Total comprehensive income includes all changes in equity during a period except those resulting from investments by owners and distributions to owners. And that's why A and B are wrong, because dividends are not part of total comprehensive income. Why? Because they involve transactions with owners. So remember that total comprehensive income includes all changes in equity during a period. What is net income doing in there? Because net income impacts retained earnings. As net income goes, so goes retained earnings. And retained earnings is an equity account. So that's why a big part of total comprehensive income is net income. And then the rest of total comprehensive income comes from other comprehensive income, and we'll go over those items now. So total comprehensive income starts with net income, and then what are these other comprehensive income items? These are gains and losses that are not ready to go on the income statement yet, but we have to show them somewhere, and we're going to put them in other comprehensive income. One of them is unrealized gains and losses on available for sale debt securities. So this is where we have an investment in bonds. And the bond investment may have gone up in value, may have gone down in value, but we haven't sold the bond. We haven't sold the investment. So it's an unrealized gain or loss on available for sale debt securities. And according to accounting standards, that unrealized gain or loss goes into OCI. Once it's sold, once we sell that bond, then the gain or loss would be realized and it'll go on the income statement. But for now, that unrealized gain or loss goes into OCI. Another item that goes in OCI, foreign currency translation adjustments. Foreign currency translation adjustments, what are they? Well, these are unrealized gains or losses due to the effects of exchange rate fluctuations on foreign operations financial statements. When you translate the foreign currency into the reporting currency. All you have to know for the exam is that this adjustment from foreign currency translation goes where? On the income statement? No, OCI. What's another? Gains and losses on hedging instruments in a cash flow hedge. So if they tell you there's a gain or a loss from the cash flow hedge, you tell them that gain or loss goes in OCI, not the income statement. And then Actuarial gains or losses on defined benefit pension plans. If you see that terminology on the exam, you tell them actuarial gains or losses from defined benefit pension plans go where? The income statement? No, OCI. Because they can ask you a question like this. Which of the following is an example of an item that may be reported in OCI, other comprehensive income? A, depreciation expense. No, that's an expense. That goes on the income statement. B, loss from discontinued operations. That goes on the income statement. C, unrealized gains on available for sale debt securities. Yes, that's something that goes in OCI. D, interest income from investments. No, that goes on the income statement. So the answer is C, unrealized gains on available for sale debt securities are reported in OCI because these gains are not yet realized through a sale. The accounting standards require such unrealized gains and losses to be reported in OCI until they are realized, until there's a sale, at which point the gain or loss gets reclassified from OCI to net income. Therefore, unrealized gains on available for sale debt securities are a perfect example of what's typically included in OCI, and that's the kind of question you're probably going to get. How about this one? On the statement of comprehensive income, which of the following is not part of other comprehensive income? All right, A says foreign currency translation adjustments. We said that is part of OCI. B, gains and losses on hedging instruments and a cash flow hedge. That's part of OCI. C, actuarial gains and losses on defined benefit pension plans goes into OCI. So it must be D, realized gains on available for sale debt securities. D is correct. OCI includes unrealized gains and losses that have not been realized through the company's normal operations. Once gains on available for sale debt securities are realized, typically through the sale of these available for sale debt securities, then the gains and losses are included in net income and no longer categorized as OCI. So the question asks, which of the following is not part of OCI? And that would be any realized gains, like realized gains on available for sale debt securities would go on the income statement. Unrealized gains or losses on available for sale debt securities, that would be in OCI. But realized gains and losses, income statement. A is wrong, foreign currency translation adjustments, that goes into OCI because it's unrealized. B is wrong, gains and losses on hedging instruments in a cash flow hedge are included in OCI until the forecasted transaction being hedged actually occurs. So if you see gains and losses on cash flow hedges, tell them that goes in OCI. And then C is wrong, actuarial gains and losses on defined benefit plans, they're included in OCI. How about this? Which of the following is typically reported in other comprehensive income? OCI. Sales revenue? No, that's on the income statement. B, foreign currency translation adjustments? Yes, that's in OCI. C, cost of goods sold? No, income statement. Interest expense? Income statement. So the answer is B. The question wanted to know which of the following is typically reported in OCI, and that would be foreign currency translation adjustments. These adjustments are not included in net income until the related foreign operation is sold or otherwise disposed of. A is wrong. Sales revenue goes in the income statement, not OCI. Same with cost of goods sold. Letter C is wrong. And D is wrong because interest expense also is reported on the income statement, not OCI. All right, the statement of comprehensive income can be presented in a single statement, starting with profit or loss and then listing the items of other comprehensive income. Alternatively, the statement of comprehensive income can be presented in two separate but consecutive statements. First, an income statement, followed immediately thereafter by a statement of comprehensive income. So if it's done in one statement, it starts with net income and then lists the items of OCI, and then you get your total comprehensive income at the end. Or if you want two financial statements, you can start with the income statement and then have a statement of comprehensive income. All right, how can the statement of comprehensive income be presented according to accounting standards? A, must be a separate statement following the income statement. Doesn't have to be. B, integrated within the statement of changes in equity? No. C, as part of the notes to the financial statements? No. D, either as a separate statement or combined with the income statement? Yes. Letter D is correct. The statement of comprehensive income can be presented in one of two ways. It can either be its own separate statement immediately following the income statement, or it can be combined with the income statement into a single continuous statement. And this flexibility allows organizations to choose the presentation that best suits their reporting needs while ensuring that all relevant information is provided to the users of the financial statements. All right, what does the statement of comprehensive income include in addition to net income? Does it include owner's equity contributions? And if you think you know, leave me the answer in the comments section. And if you're struggling with the CMA exam or the CPA exam, and you found this video helpful and want to see the rest of it and more videos like it, get yourself on I-75 with me, Darius Clark. I'll leave a link in the description. You see the menu bar at the top. If you're a CMA candidate, you click here and choose Part 1 or Part 2. I-75 CMA is the only material that you will need to pass the exam. You might have some other stuff, but you don't need it. In fact, if you don't think I-75 is better than any other CMA material that you have, let me know, and I'll let you return it for a 50% refund. So what do you have to lose? So whether it's CMA or CPA, go to i75cpareview.com and get yourself on I-75 with me, Darius Clark, because the right teacher makes all the difference.